What is up, everybody? Logan here again with another video coming right at you. And today we made $930 today trading 0 DTEs on SPX. We'll go over the risk. I want to show you guys the expected move math as well. And then I brought the whiteboard out so that we can write it all out and you guys can get more accustomed to the math I do every morning to pick my strikes and find where I'm going to place my position and the reasoning behind it. Just like yesterday, except this one's going to be a little bit more in depth, but I'm also going to show math like you guys are back in third grade because simplicity is the best way to do this. So before we get into this one, you guys should leave a like on this video. It would help me out greatly. We also just passed 750,000 channel views, which I really appreciate. And a really cool thing, I just became a portfolio manager with Hangfire Investments. Super excited for this opportunity. So just wanted to keep you guys up to date on what I've been doing. This is the first time I've worked in over 2 years because I've just been a full-time trader, and just really awesome opportunity there. So really excited, but let's get into this one. If you guys want to come join and trade with us in the Discord, the link is down in the description. I'm 35 for 36 in my last 36 0 DTE trades. Today's got a little shaky, but we made it out alive, expired worthless, and had other take profits as well and opportunities too. So first, let's start with what we always start with, which is our 10-day, 30-minute chart. And this chart today, before we even look, I was in the call credit side today. This big gap up had me eyeing up call credits already because we found out that a 3% move on a day happens only 3% of the time, right? Whether that's red or green. And then we saw that a 3% red day is about 55% of the time, and 45% for a green day. So already opening up, 1.8%, right, off that CPI news that consumer pricing is actually rising. But it looks like this could be an area where we're topping out, where I really don't believe that. If you look at the chart from 2008, it looks like, we could start pulling back again, but what a rally, what a big squeeze. And we went up 87 points today. So yesterday, if you saw in the video that I made on pre-CPI day, basically what I was looking at was the expected move was 50 points and we did 87. And I also mentioned yesterday, be careful if you're placing your strikes around the expected move, especially around big events, big releases. And today we exceeded the expected move for the first time in August in one day. So we got close. We were at 42.25, 42.35, still walked away with a really good trading day. As you guys can see here, I threw these call credits on. If you go to the monitor tab, here's my 930, risk 16 grand to make 930 bucks. And like I said today, when I called this play out to the Discord, when I first initially took this position, I started it smaller and added to it as the day went on, as it started to fit my risk profile. And then when we did have that jump later around 11:30, I added a couple more contracts for an extra 140 bucks. So really, really fun times there, shooting for 3.5 to 7% per opening the position. Like I said, my plan is to just slowly grow this account over time. And not worry about where it's at exactly today, every dollar, because I'm more focused on the long term of what if I was successful every single day or close to every single day trading 0 DTEs, getting a small portion and then continuing to scale up as the account grows. So you guys can see here, like I said, 1030, 1035. So it's right around this candle, right around this 41.93, I think is where my first fill was. And then the market started running. And, like I said, I haven't used a stop in these. I didn't even scale in until about 11:30 with the rest of the contracts, which gave me time to see, okay, where's the resistance? We're already exceeding the expected move by almost 2 times. So I'm cool with putting myself up at about a 2.5% move for me to get tested on those strikes. Plus I have capital to manage this trade. So I went into this like, okay, it's CPI day. Let's be smart and let's find strikes to where we can feel less of pain. So that's what I did here. That's how I made my decision. Yes, we were above the moving averages, but you got to remember, I like to play the probabilities more than anything. And the probability that we continue to rise, it's even rare to see a 2% day, right? So that's why I made the decisions I made today. We continued to range and chop and let the moving averages catch up with us. And like I said, this price isn't going to stay far away from these guys. So it didn't want to continue to trend up without coming back into contact with them, just like every other day that we trade this market. So if you're somebody who thinks the market's just going to plummet 10% overnight and all your money's going to be gone, that is typically not how it works. And rarely does that ever happen anyway. So use your moving averages to help you out. So it did get a little close a couple times. So let's go to the trade tab so I can show you guys the expected move math and how to even be profitable on days that the expected move gets exceeded. Like I said, it's all based on the probability, where you're at, and what the expected move was, and how you can position yourself for the best way possible. So then you could either stop out of your position, ride out the odds, or potentially roll to manage. So we go to the trade tab here today. You guys can see the plays down here, right? Now, look at for tomorrow. Tomorrow is a 33.68. So we can round this up to 34. That's what I'm going to do for the example. And we closed at 42.10. So let's go to the whiteboard. So we're going to do third grade math for you guys, okay? We're going to do 42.10. This might have been too big of a number. Could you guys count to 4,000 in third grade? Is that, I can't remember. So I'm going to do plus and minus. Plus and minus, we'll do 34. I'm trying to write with my cursor. So expect tomorrow's move to not exceed outside 34 points. So on the upside, so I'm going to do the plus sign and then I'm going to do the minus sign here. So that would put us at 42.44 as the top side for what shouldn't be exceeded. Now, granted, the VIX is low again. So that's another thing we got to be mindful of. And then 34 minus 42.10 puts us at 41.76. So that is what is expected for tomorrow, is the market to range between these two numbers. Today we exceeded it, right? So now if you take a day like today where we exceed it, and I still took a position on the call side because after closing at 41.22 yesterday or 33 or wherever we did, we were already exceeding it by open this morning. We were right on top of it. So I wanted to make sure I could stay above it. So that's what I would do tomorrow. If the market opens up, I don't know, 42.35, I'm going to look for a position that's potentially 2 times outside of this. So if I can get credit when it's 42.35 at 68 plus 42.10, so it would be 42.78. In that math right? Yep. 42.78. If I can find something in this ballpark, so maybe a 42.65 call credit, you know, 42.65, 42, I don't know, 42.70. See if that's giving out any credit in the morning, or 42.75. So that's how I would play that, right? Hopefully you guys didn't lose track here. But that is the expected move math I do every morning, and I look to see are we exceeding it to the downside or the top side, and that allows me to pick my strikes when I do, and then I let the odds play themselves out. Like I said, that is my main goal here. I try not to risk too much money. I do what I'm comfortable with. And if you're able to do that and pick the strikes at the right spot and not be dumb, right? If you did right at open, if you're like, look at that gap up, I'm going to slap some 41.90s on. You know, we got a nice rejection at 4,200. Well, that's still like, yeah, I get it. You're outside the expected move, but you got to look at the overall sentiment of the day. There's a heavy amount of buying, right? If we zoom out of the flexible grid for a little bit and we see the ADD is up above 2,000 and the volume distribution had been rising all morning, like, you're in for a tough ride today. So even when you fight the trend, like I did a little bit today, although I didn't take the position till here and we really didn't rise above that, you know, maybe in 10-point move up. The VIX is very low now. Whenever stuff like that happens, just be mindful of where you're at, right? Don't be slapping stuff on right away. That's one of my favorite rules whenever CPI comes out is let this figure itself out, then slap a trade on. You're a day trader for a reason, because you just want to figure out how to trade that day. You don't have to force something. And if it doesn't work, you just literally show up the next day. So that's kind of what I want to show you guys in this video. That's how I made this trade today. Just simply use the ticks, the ADD. Now we have a big gap to fill. We're going to have to come back down and fill this gap at some point. Who knows when it'll be, but that 41.23 range, 41.25, wherever that exactly was, we'll fill this gap. But like I said in the last video, don't be stupid. Just literally trade what you see. Just day trade. Who cares? For whatever reason the market went up, it literally doesn't matter. Can you find the price action? Can you find good strikes? And can you position yourself with the proper risk so that you can make money over time? Because like I said yesterday, nobody cares if you made 900 or 920 or 940. No one's going to look at you and be like, oh, if you shouldn't have stopped out. I told you not to stop out. Like, who cares? That literally do what your risk parameters tell you to do. I won't judge you if you stopped out and then the market immediately ripped down. It's happened to me before. That is literally part of trading. So that's my thoughts on this. If you guys need anything else from me, please leave some comments below. I'll have probably a new video out tomorrow and Friday. I want to get back into posting. I took a little YouTube break because a little secret, when the market falls, YouTubers stop getting their videos watched if they're a stock market YouTuber. So like you put in all this work and then nobody's watching, kind of sucks. But that was kind of my thesis. So yeah, that's everything I have for this video. Basically just use this criteria for your entries. I hope enough of this made sense, but do that for tomorrow. Look at that whiteboard math, pull this back up. This third grade math is right here. If you're not smarter than a fifth grader, I don't know what to tell you. This would be the third grade math category they select on the show. It's how do you trade the S&P 500 with the expected move? So that's my thoughts. That's what I would do tomorrow. And then same with on the put side. The only thing is though, with the put side, this will be the last thing I show you guys. VIX, right? If you look at the volatility index, this thing has been getting sold. And I like to think we're going to head back to this 21 to 23 range. So if like we immediately start selling in the morning, it might not be the best to get into a put credit. So I'm going to keep my eyes on that, but stay neutral. We're day traders here. I don't care where the market's at in 3 weeks. I don't care where it's at in 6 months. I don't care where it's at in a year. I care what it's doing today. And I care what it will do tomorrow. And I'll slowly chip my shots at this market. So that's going to be everything for me. I hope you guys have a great rest of your day. And I will see you guys in the next video.